All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market, here kind of rallied a little bit this afternoon. Kind of near, well, futures are sitting where they were overnight at their highs. And that's kind of what we're seeing. We have a decent mix of red and green. A lot of stocks that sold off early have been bought back up. And a lot of stocks that were bought up early have kind of faded a little bit. Nothing too remarkable in the price action. Nothing too crazy there. If we look at the energy sector, it's getting rolled over again. With the oil inventory report that we saw, a few weeks back, we talked about the only trade I like in energy, and that is long Chevron, right? Long shares of Chevron and short the XLE and play for Chevron to outperform the XLE. And it continues to work. I expect it to continue to work over the course of the summer. It's still one of the only energy trades I really like that is out there on the board right now. And, we talked about it, about 4 or 5 weeks ago now. That same trade is still the trade in energy here. I know Chevron has some uptick here today with oil down. Has a 3-7 crossover, isn't triggering bullish on the algorithm. It is on the watch list, but doesn't have a bullish trigger here today. But it's one of those sectors, one of those groups where there's just a little too much unknown. And what do we know? Well, we know that if oil starts to go higher, Chevron's going to be one of the quickest to benefit. And if oil goes lower, Chevron ultimately is going to benefit, the stock will go down with the rest of energy, but it's not going to go down at the same velocity, at the same pace, and so playing for Chevron to outperform the energy sector is still the best energy trade on the board, out there, at least for me here. Okay. All right. I'm not going to get into too much today. I don't really think there's a whole lot to look at today. It's just kind of one of those days in the market where, we've had a big bounce and yesterday. And, a lot of times after a big bounce, we will see, I'll show you the last big bounce, right? The last big bounce right here. The next day, market gapped down, sold up, rallied. And then the next day, it gapped up and sold off. And then it gapped down and rallied. Then it gapped down and sold off. And then kind of had a little breakaway element, right? And that's very common after kind of a bottoming type action. And I would not be surprised if we see some chop, through where we have a day where, the market's down 20 points in the morning and ends higher, or it gaps up and sells off a little. I wouldn't be surprised to see a little bit of that, come into play at all. In fact, that'd be a little more normal than abnormal. But I do think there is a chance, there is a chance, just looking at how the metrics have shifted, that we see a market that just kind of goes a little bit vertical here, to the upside. Some things have to fall in line. Some things have to, come into play for that to happen. But I do think there is a chance, there's a stronger chance than normal for that to take place right now. Bear with me for just a second. I'm being signaled that there's a couple streaming issues. Let me see if I can sort that out here. Make sure everything's good to go. Okay. All right, I'm getting the thumbs up now. All right, so let's go. Challenge. We have 2 trades on the board. We have Disney and Under Armour. Let's start with Under Armour. Stock is trading at $25.65. Our profit area now on it is $26.40. So, we pulled 4 contracts this morning, and, stock still needs to go higher to hit the next price target. They're on it. Let's go and take a look at the option price here. Option price is $350 right now, so we'll put in $350. And then Disney, the stock profit level is $138.33. and Disney price, it's not there. 135.87. We still need a pretty sizable move to the upside for Disney to get to a point where we pull some off. And the option here on Disney is at 410. So we'll fill that in here. And that should update it. Yeah, so puts the challenge at 73.47. Not a bad run here in the last 3 trades. Nice little go here with those. And we currently have 2 trades open, and 1 trade is 60% of the original contracts, as we pulled some Under Armour off here this morning. Okay. All right. Now we have any new signals on the board. We have 1 signal, and it's not the one I thought we would have. It is Visa. Visa is signaling bullish here, and it's not the one I thought Procter & Gamble would, but it's not. But Visa is, and so we're going to go out and trade some Visa here, have some cash because of the pulling off some of the Under Armour earlier today. But with Visa, we're going to do a little bit of a different option. We're not going to go out to the regular monthlies. I don't like the pricing on them. In fact, I'm not a huge fan of the pricing overall on Visa, with the options. I don't think it's all that great, but it's still something where, a $5 move, we could do very well on it. And so going to go out and buy 6 contracts of the July 5th 165 calls here. So 6 contracts of the July 5th 165 calls. I'll put a limit order in here for 360 and see if it fills me. While I get the alert out, I don't expect that it will. Just having traded Visa a bunch, it's they don't tend to let you split the option price there. But so about 365 will probably be what I'll have to fill for. We're doing. We're doing 6 contracts, so $2,100 there on that, and then the 5th of July. 165 calls here with a Visa. Okay. Now let me come in here, view the order, and cancel that. And let's go and put it at 365. And it'll fill us there at 365. And so let me just make sure the alert goes out. We did have a little issue this morning with the alerts. Some people got them right away. Some people it was delayed. It was delayed being posted to the site. So just want to make sure everything is everything's golden here with that entry. And it looks like I'm getting the thumbs up. All right. So at least on our test servers, it all went through and running there with Visa. Okay. All right, so let's come into the spreadsheet. Let's get everything in here on the spreadsheet. This will be the first time we're in 3 trades at once. So Visa entry date 6:05 p.m. and it was the 5th of July. 5th of July, and let me get the strike here. Sorry. 165 calls. And the option entry price, $365 on 6 contracts. And stock entry here on Visa is 163, or excuse me, last 164.85. So 164.85. The average true range on Visa is 283. 283. So that's going to give us our stock exit level. It's going to give us our stock profit level here of 170.51, and then our current stock price. I'll just populate that here. Again, this isn't updated real time. It's got a 20-minute delay there on it, as it's from Google Finance there. Our auto exit date here is going to be 3 days from now. So on the 10th, so 6:10 p.m. 6:10 p.m. and then our profitable exit date 6:12 p.m. and Those are in play. Let's get the cash in, 2190, so almost 2200 going in on that. And trade is now open. Okay. Trade is now open. So that's going to give us here for the challenge in terms of a cash value of just under $600. So we pretty much have everything in play. And between the three trades, and we can see we have it pretty even right now between Under Armour and Disney and Visa. 2100 in Under Armour, 2460 in Disney, 2200 essentially there in Visa. So pretty even dispersion there with those. Okay. All right. I want to talk real quick about option choice here for the challenge. And we did back last month, we did a kind of the last test for the challenge in terms of, hey, which option to pick. I'd run other tests already with that, but, wasn't ready to launch the live algorithmic challenge yet, so decided, okay, let's just do another little test here. We'll show kind of how the option picking, comes into play. And it's one of those things when trades are working, perspective is very different than when they're not working. When trades work, right, the perspective tends to be, oh, well, let's just assume the trade's going to work, and let's do whatever it's going to take to maximize the trade. And people start to forget, hey, there's a chance a trade doesn't work, right? That possibility is in there, right? People forget that. But when we really look at things, that possibility is real. And we've talked about with the algorithmic challenge that over the course of a 4-month period, it is almost a numerical certainty that we will go on a streak where 3 trades in a row lose and get stopped out. It's almost a numerical certainty with the way the algorithm is built. So somehow, with the choice of the option, we have to be able to survive that. We can't have a challenge go to 20 grand and then have a losing streak of 3 in a row and boom, it's done. It's out. Some people say, well, don't put so much money in it. Well, how are you going to get to 100, right? It's one of those where I have to look at the challenge with the idea that the potential is there and the reality is there that we're going to have a 3-trade losing streak at some point. Now, I hope it doesn't happen, right? I sure hope it doesn't happen. But at the same time, to get some of the explosive upside, right, I have to have the algorithm tweaked to a degree where there is some risk, right? If I were to tighten up the algorithm a little bit, Under Armour would never be a trade. GLD would have never been a trade. JD would have never been a trade if the algorithm's tighter a little bit. So tightening, yeah, we're going to have fewer losses. We're not going to have a good odds of a 3-trade losing streak, but we're going to sit here with very few trades over the course of a 4-month period and not nearly enough trades to really do anything significant unless every trade hits, which, let's face it, maybe somebody very much smarter than I can hit 100%. But, that's not even something I expect to do or even hope to do. So I need to have an option decision here that has this balance between explosiveness and survivability. And that is why the options are chosen the way that they're chosen, because they have that best balance. Yes, we can go out and say, well, had we chosen a more aggressive option on Under Armour, the gain would be greater. You're absolutely right in that statement. It's, of course. But also, right? Also, had we chosen a different option on Procter & Gamble, this trade would have been a loss. Had we gone more aggressive on the option, the trade would have been a loss. Doing the exact same things that we did, the trade would have been a loss. Ended up with a gain. There's a trade-off, right? The more aggressive we go, if we start to get more aggressive on the option, the chances of the challenge surviving a 3-loss losing streak is very, very slim. Okay, can we get the explosiveness? Can we get a double every 3-4 weeks doing it this way? Well, you can see the result, right? You can see the result there so far. Obviously it's going to ebb and flow and up and down, but we've been pretty darn conservative on the options, right? I mean, even more conservative than I have to be for the challenge, right? This 30 to 60 day period, I've opted much more for the 45, 50, 60 day rather than the 30 day. Had we opted for the 30 day, sure, the gains are going to be a little bit higher. So we've played this pretty darn conservatively, and, we're still sitting with some explosive gain. And something where, we have the kind of same process repeatable over time. So I don't have to go and choose a weekly option and get into this, kind of a lotto type of scenario here with it. It's too much risk. And you say, well, challenge is meant to take risks. Well, we are taking risks, right? We're buying options. Options are inherently risky, right? And it's just one of those things where, if you want to trade a different option, go for it. But the challenge chooses the options that it chooses for that balance between risk and upside reward potential. Okay? So hopefully that answers that. Now, before I hop off, I want to discuss one other thing. And this is something that I have known for a while, and I've kept to myself, and I kind of just feel like right now is a good time to share this. Knowing some of you out there, having had conversations with, many Trader Minute members over the years. And it's just something I want to express so that, just to create a little bit of understanding. But a challenge is going to drive two types of traders nuts. This algorithmic challenge, the way that it's structured, the way that it's set up, it is going to drive two different types of traders absolutely nuts. And there was no way for me to take it out. There was no way for me to avoid this in building the algorithm, right? The way the challenge is set up, it's very conducive to some traders, but there are two types of traders that it just absolutely is not conducive for. Number one, the micro analyzers. The ones that want to find meaning in everything, right? Want to absolutely find meaning in every little detail out there. For example, Pepsi yesterday, Pepsi wasn't up much yesterday, so something must be wrong with Pepsi, right? Well, now, the ones that just kind of create logic and reasoning that doesn't really have any basis, factual basis, any sort of statistical basis, that just kind of come up with theories and ideas and concepts. And yeah, they can sound really good, but they change a lot. The challenge just is going to drive those types of traders nuts. It drives the micro analyzer in me nuts because we all have some of that, right? I look at Under Armour and I go, you know what, man, can I just sell it here? I'll just buy it back tomorrow when it dips. But I can't do that, right? Can't do that. That's not what the challenge is designed to do. The challenge is part of a statistical model that is designed to be able to outperform the micro analyzers, frankly, right? Micro analyzers are just those that think everything means something, just hyper focused, and they're constant decision makers. Constantly looking at a trade every 5 minutes and going, well, what should I do? Well, what should I do? Well, what should I do? What should I do? The challenge is going to drive those traders bonkers, up the wall, and it's something where, hey, those types of traders are going to be able to participate in the challenge and run with it. But if you're applying a microanalysis to the challenge trades, it's going to be pretty maddening. So it just kind of keep that in mind. And then number two, the hindsighters, and we all have a little bit of hindsighter in us, right? We all have a little bit of hindsighter. But the challenge is going to drive hindsighters nuts because every single trade. Let's just go to gold. Come on. We could have gotten in earlier, right? We could have gotten a little earlier. Man, can you imagine how we got out this morning? Right. In hindsight, it's easy to say that. Right. In real time, not so much. Right. And we're never going to get bottoms. We're never going to get tops. Right. And it's just one of those where, the hindsight trader that says, man, that was a decent gain. Had we done a different option, it would have been even better. Why not do that? It's gonna drive the hindsighters absolutely insane, because it is not geared in any way, shape, or form to maximize every single individual trade. It's geared to maximize a basket of trades, not to maximize every individual trade. There are too many variables in the market. There are too many variables on a day-to-day basis, hour to hour, minute to minute, to realistically put something together to pick tops and bottoms. Can we pick tops and bottoms in some day trading and do a little bit with that? Sure. Anything super consistent? No. Not that I have, not that I'm good enough at, right? But the challenge is not built for microanalyzers and hindsighters. We all have a little bit of that in us. Some of us a little bit more and less. In fact, I'm not much of a hindsighter, but sometimes, I feel those hindsight thoughts, right? They come in. It's the market. The market plays tricks with us. The market, constantly has all these different wisdoms, and all the different wisdoms, they counteract each other. One real wise trader says, hey, you always take a loss at 30%. Another real wise trader says, no, hey, you always buy more with a 30% loss, and then you sell it at 50%. There's just all sorts of rules and variations and different things. The bottom line, you have to find something that you're comfortable with. And, the challenge, everything is laid out here. Everything's laid out in terms of how it works and how it goes, and the rules that it follows, right? And none of these rules are arbitrary. Every single one of these rules has a significant meaning, a significant reason behind it, and something that is very statistical, and something that over time has proven successful, and that's what's put together here. And so, it's just, that's going to drive the microanalyzer in each one of us a little bit nuts. It's going to drive the hindsighter a little bit nuts, right? Because we can say, well, the challenge is at $5,000. Well, had we done this, it could be at $8,000, right? The challenge will go to $12,000, and we can go, well, had we done this, the challenge could be at $20,000. You can always say that, right? Every day, every stock, every trade in the market, you can always say, well, had we done this, right? Because hindsight is easy. Rewind me to December, give me this chart of gold, I'll turn $1 into, $100 million. It's very easy to do when you have the data, when you have the chart, when you know what's going to happen. But, the reality is, no trader has a crystal ball, and so we play the odds. Risk, reward, exposure, and put the odds in our favor. And that's what the algorithm is designed and built to do. And that just isn't very conducive to two types of trading mentalities, there. With it. It's very conducive to a lot of other trading mentalities, kind of the just a little calmer. Hey, you know what? Make decisions just a couple times a day, pre-planned, pre-programmed, and hey, I just want to look at the key data, the key information. Don't want to bring it all into play. I don't care about the price of tea in China. I don't care about, whether Iran is sending ships to, this part of the country or that part of the country. It's just one of those that plays the odds, plays the numbers, and, it will have nice runs up, and it will have, stagnant periods, and it will have, pullbacks, but ultimately it is built to give a very strong chance of 100K, and more than that, to give a very strong chance that the majority of the challenges end with significant gains. And that's what the challenge needs, and that's what the challenge is. Is for here. Okay. All right. Thanks for hopping on. Have yourselves a great evening. I'll be back with you here tomorrow morning, and we'll talk to you then. Take care.